In today's video, I'm going to be sharing how top real estate investors have been changing their strategy over the last 6 months. It's an ever-changing environment, and some are doing things differently and others are not. I'm Kathy Fettke, and welcome to The RealWealth Show.
You're listening to The RealWealth Show with Kathy Fettke, the real estate investor's resource.
And if you want more content like this, just subscribe to our channel and you'll get alerted to whenever a new show comes out. Our first guest is Jay Scott, a partner at Bar Down Investments. Jay is a seasoned multifamily investor, accomplished house flipper, and well-known commentator on the U.S. housing market and economy.
So a lot has changed in the world. Has your investing strategy changed, and are you still investing?
Yeah. So the answer to the second question, are we still investing, is always.
Yeah.
There's generally going to be a strategy that works in any market, any situation. You just have to find a strategy. And so for us, we have pivoted somewhat. We're doing fewer, for example, flips. So I'm a little concerned that we could see prices drop in the single family market by a couple percent. And the thing is, when you're flipping houses,
That matters.
a 2 or 3 or 4% drop in prices
Yeah.
can make a big difference because you're not getting the cash flow. We just talked about the fact, and as long as you can hold a property long term, you don't have to worry about whether in a storm. When you're flipping a house,
You worry.
you worry about.
There's a limited time. You need to get it done. And if the timing isn't great,
Right.
it's going to hurt.
And if your profit margin's only 10 or 15%, a 2%
Matters.
2% matters. And so we're not doing any short-term transactions right now.
Yeah.
What we're focused on is we're focused on long-term buy, long-term hold. We love the multifamily market. We love the residential space.
Yeah.
Realistically, there's not a lot of supply that's going to be coming online over the next couple of years. We had a good bit of supply the last few years, but it looks like that's slowing down. Home builders are starting to slow down. And so if you're building or if you are a landlord that's buying to rent, there's probably going to be a lot less supply increase over the next couple of years. And when you have less supply increase, what happens? Rents tend to go up. And so we really like the rental model. We like the building model. We like the development model because, again, we're not seeing a lot of supply likely to come online, especially in the multifamily space over the next couple of years. And so we're not going to have a lot of competition with other new construction coming online. And so right now we're focused on continuing to do multifamily value add. We're starting to focus on some residential construction, but everything's in the residential space because I personally believe that if the market is likely to soften, and I think there's a reasonable chance that it will, residential is always going to be a great place to be. People need a place to live. People need to rent. And so for me, it's not so much, am I still investing? It's just, am I modifying my strategy somewhat to accommodate how the market's changing?
And there continues to be a shortage of housing
Yes.
as our population grows, and we're filling that need.
We were somewhere between 5 and 7 million housing units short.
Yeah.
And so I don't see the residential side of housing struggling anytime in the near future.
At 5 to 7 million shortage doesn't maybe sound like a lot. Like, why can't we build that? But we haven't been able to build that.
We
Yeah.
build about 1.5 million houses per year. And so we have to do that just to keep up.
Yeah.
If we deliver twice as many houses per year as we normally do on average, it would still take 3 or 4 or 5 years to cover that shortage.
Yeah. Yep. We'll be in business for a while trying to provide affordable housing for people who need it.
We will.
Joining us next is Thach Nguyen, a highly respected real estate developer and investor based in Seattle, Washington. He's known for his dynamic approach to building wealth through real estate.
All right, so there's been a lot of changes recently.
Yep.
Are you changing your investment strategy as a result? Yeah.
Absolutely.
How?
So I was building a lot of big apartment buildings from ground up, like 30 unit, 40 unit, 100 unit buildings. And now with interest rates so high, land so high, construction so high, all three of them, it just messed up the whole performer. And so, but what's actually working right now is the ADU play.
Yes.
I can buy a house with a big enough lot, let's call that 6,000 square feet. And I can buy a property where I can value add the house. If it has a basement, I can make a unit downstairs.
Yep.
And then I have this whole backyard. And then with this backyard, I can put 1 or 2 ADU in the back.
Yes.
And the cost to build an ADU for me is like $350,000 for a 1,000 square foot unit. But we rent it for $4,000. So it has a more than 1% rule of thumb, right?
Oh my gosh.
So this formula right now in today's market is outperforming my multifamily and my apartment building from ground up.
Incredible.
Yeah.
What about parking?
That's a problem, right?
That is.
They did, because when you build an apartment, you gotta plan for parking and traffic studies, area, so there's so many studies, and then you now could just go and put a bunch of units and nobody could park anymore.
That's right. So here's how it works, right? They only allow ADU really in dense area.
Yeah.
Because that's where the affordability is the hardest.
Yes.
So what they want to do, they want to create affordable housing in city, and it works out to the suburb. So if you have a house and the house already got a garage built in, that house will use that garage.
Yes.
Typically, when I do ADU, I make sure it's a back alley or it's a corner lot. So when I pump in 1 or 2 units back there, then I will provide parking pads for the units in the back.
Oh, so they can just kind of drive back.
That's right. Or if come from the alley, or if it's a corner, they kind of straight in this way.
So you're thinking it beforehand. So because the neighbors get really upset.
They do.
And they should, because they bought their house, they thought they had parking, and then now someone's bringing in.
10 cars in the front.
Yeah.
That's why they shut down San Diego, where they were doing that bonus program. Someone go buy a single family in the backyard, they build a 35-unit apartment building in the back.
Yeah.
And then they shut that whole thing down.
Sure.
So, but the problem with developer does that, they only think cash flow, they don't think of resale.
Right.
See?
Yeah.
And now I hear a lot of the rental property, they're not having a hard time leasing it because who want to live in that type of environment?
Right.
See?
Yeah.
So what I do is I keep the single family, I put 1, 2, or 3, but I put parking pad now. When I build up 3 level, I cantilever the first level. See?
Okay.
So then I provide parking for the back, and the house already has this parking in the front. So everybody's happy. And that's the new thing I'm doing now with this new environment in real estate.
Incredible. And getting higher cash flow than you would in an apartment.
You got it. And big equity.
And big equity.
That's right.
Really, because you're pushing the equity up as well.
That's right.
We're also excited to welcome Bronson Hill, an investor with a strong focus on alternative assets and real estate, where he specializes in passive investing strategies.
All right. Have you shifted your real estate investing over the past 6 months with all the changes that we've seen? Or are you doing the same? Same old, same old.
Yeah, the last few years we've shifted a lot. We were doing a lot of multifamily investing, which was great until it wasn't. As you know, you've had some experience in multifamily investing as well. And so we've really shifted into investments that cash flow really well. Right? So things like oil and gas, things like even first position debt funds. We have partnered with a lender. We're buying actually private businesses as well. And then our latest thing that I think I mentioned to you, we're doing modular homes on single family properties because we do them way cheaper and way faster. And so those are a few things that we're excited about.
Oh, I love everything you just said. I mean, I could go through it all, but let's talk about all the boomers who are retiring and have businesses that they would love to sell. That is a huge niche right now.
It is, yeah. So businesses, they can be a little challenging to acquire, just sourcing them, as well as actually getting them across the finish line. We actually were 7 months into a deal and had a bunch of diligence in. We ended up not being able to close the deal and it was disappointing. We learned a lot while doing it, but I think as an investor or operator, you have to have an idea that learning is more important than whether you get something done or not. We learn a ton. And so, over time, opportunities come to you. So if you kind of have your radar out, I've thought about where to have that says I buy businesses, at conferences like this, to pick up and say hello. And
Oh, absolutely.
that. So
Yeah, well, and the debt fund, we're starting a debt fund. We've done many, but now, again, coming to the boomers at RealWealth, we've been around for 20 years, and people that were in their 30s and 40s are now older, and they don't necessarily want to own rental properties. They don't want to take risk, and they love the idea of just lending money, but not even having to be the lender, letting us handle all of that for them. So we'll be starting the debt fund. We've got some multifamily fund starting as well because multifamily did crash. I would say if anything crashed in real estate, it was office, and multifamily certainly got hammered, but that means that now is the opportunity. So lots of opportunity out there.
yeah, 100%.
Yeah.
Next, Craig Curelop, founder of the FI team and a Denver-based investor. Craig is a leader in house hacking and is passionate about tackling affordability challenges in higher cost markets.
So the market's been changing. Some people are changing up the way they're investing. How about you? Have you changed anything over the last 6 months in how you invest?
A little bit. So we have identified a need of, at least in the city that we primarily invest in, which is Denver, Colorado, of affordable housing. And I think that is the same around all areas.
Yeah.
And
Great East.
Right. People can't find a place to live for an affordable price. So we're solving that problem through co-living. So we'll buy a large single family house or perhaps a multifamily place, take all the additional common areas, chop them up into some bedrooms, create a community within that home and rent it out by the room. And the people who are living there get a fantastic house in a fantastic area with great, everything for half the price. The investors get a cash flowing property in an area that wouldn't cash flow otherwise. And the cities are actually loving it because it's bringing more people into their city, paying taxes and helping their city grow.
Are you using resources like pads or?
So we're very involved with Pad Split. We love Pad Split and that they're like kind of paving the way for co-living, but we don't use Pad Split.
Okay.
We're able to source our people ourselves and we manage the whole properties ourselves.
So each room has a lock on the door, just like a door, something like that. And then the common areas are the living room, TV, the kitchen.
Exactly.
Do you split up the kitchen somehow? Or does everybody have their own fridge in their bedroom? How does that work?
Yeah. So our ratios that we have 4 people to a fridge. So if there's 8 people in the house, we'll have 2 fridges and you can do that math.
Okay.
And yeah, everything is kind of sectioned out. Everything is labeled with a number or color relative to the room that they're in. And it's all very organized and very well laid out. Now if the system's in place, it kind of just runs itself and it's really nice.
I imagine that there have to be some house rules. No flirting with the other. I know. Like, what kind of rules do you put in place? Or do you have certain houses where you're allowed to flirt and other where you're not?
We're not gonna. If people meet in our house, I would be honored. Just if they get married, and that's a good thing. Like, so we have a set of rules that mostly revolves around the chores around the house.
Chores. That's a problem
Everywhere. Yeah. And so what the main thing that we have in the kind of the catalyst to our whole management system is we have a chore board, which is a spinning wheel. Everybody gets assigned one chore per week and that rotates every week. And so everyone is responsible for like 20 minutes to an hour worth of chores a week. And these are chores that they would have to do all of if they lived on their own. But now by themselves, they only need to do 1/10 of the chores or 1/8 of the chores.
Okay.
And so as long as everybody does their chores, which if they don't, they leave.
They're kicked out.
They're kicked out. Yeah.
Their lease ends.
Their lease ends. Yep.
Okay.
Yep. So we train them on that. We make sure that they subscribe to what's going on and what the house is all about. And the houses are, the mission of the house is to keep the house clean.
Yeah.
So the house kind of manages itself. But people love living in a nice, clean house and they stay a long time and they love it.
Can you use the same philosophy with your children?
100%.
Okay.
Yes.
Just wanted to check.
100%.
All right.
Yeah.
And finally, we have Ashley Wilson, a multifamily investor, syndicator, and co-founder of Bar Down Investments, where she's built a reputation as a leader and a mentor in the industry.
So are you changing any of your strategies based on changes in the market? We actually have just shifted to development. I'm a huge believer in understanding where we are in the market cycle and what opportunities exist. Right now, we have a huge shortage when it comes to housing, and I don't see that changing. In fact, if anything, I think the numbers are not accurately reflecting the shortage. I think people are going off of permits, but in the recent quarters we've come off of with respect to the accessibility of debt, we're seeing a lot of projects be put on hold and even abandoned. So when they're calculating how many new units are coming online, they're looking at permits pulled, but in reality, there are a lot of permits that have been pulled on projects that are sitting idle. That's right. So I think when you look at, we have this gap and it's widening between demand and supply, it's basic economics. When you can't keep up your supply with the demand, you have a natural shortage. So I think as a nation, I know there are pockets where there has been overdevelopment, but by and large, across the entire country, we have a shortage, and I don't see that changing anytime soon. I agree.
If you want more content like this, just subscribe to the channel and you will get alerted when new shows come out. I'm Kathy Fettke, and we'll see you on the next video.
Views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.